The historical rise in interest rates has hit the housing market, resulting in lower sales and more properties on the market. As the year draws to a close, what could this mean for both buyers and sellers? Joining me is Global's real estate expert, Nick Markou. Hi, Nick. It's good to see you.
Hello. Good morning.
I can't believe that we're already in our last real estate segment of 2022. And I think if we could look back at the year, the numerous interest rate hikes will definitely take the big storyline, Nick.
Yeah, it's been definitely a weird year for real estate because the interest rate hikes came, around August, September more aggressively. It's definitely changed a little bit towards the end of the year. So a lot of cool stats are starting to come out to see kind of where we're going.
Okay, that's interesting. Okay, so let's explore, I mentioned how we're seeing fewer sales, but more properties on the market. Let's look at that a little deeper. So what is the cause for fewer sales?
So basically, in general, what we're seeing with the most recent stats that have come out are basically November stats in comparison to November last year. So we're seeing, like you said, a lot more properties on the market, a lot fewer sales happening, mainly driven by an increase in interest rates.
Okay, and the interest rate, which has gone up 7 times this year, so we're keeping count. So what about lower affordability? Is that the reason why there are more properties, because people just can't afford it, Nick?
Yeah, so basically what the higher interest rates are doing is obviously giving less buying power to the average buyer, so less affordability. It's also creating a lot of, let's say, less confidence. So people are a lot less confident in the real estate market or to enter the real estate market right now. So we're seeing a lot of people sit on the fence to kind of decide, what should I do? Should I buy? Should I wait? Are prices going up? Are they going down? So in a result, I think we're going to see, a lot more people go towards the rental market again, which we know is already a little bit of a problem.
Yeah. Okay. So let's look ahead to 2023, because you said the big question, are prices going to go down? Is that wishful thinking on people's part? What have we seen so far?
Well, surprisingly, the stats from November 2020, last November 2021, in comparison to this November 2022, we have not seen much of a difference in price. So we're seeing, around a 1% difference. And I think the condo market actually even increased 2%. So we haven't really seen much of a price difference. Now, the important thing to take from that is that last year, November, prices still went up after that. So it's important to note that during the summer, there was an increase in price. So if we compare, the summer to now, we'll probably see more of an increase, but November to November, there hasn't been much.
Okay, so basically what the hope would be, what we need to see then, is for these interest rates to come down a little bit so that we can have some balance in the market, right?
Yeah, we're hoping to see that. We're hoping that the real estate market doesn't get affected too much by holding the rates too high for too long. Now, what we're expecting is that most likely they will stay high for probably the first half of 2023. And then we're hoping that they'll start easing off towards the end, where the next real estate market, May, June, July, will start to hopefully stabilize a little bit. Yeah.
Okay. So I guess, all in all, we're not going to we're going to feel the true impact of these rising interest rates. Like 2023 will be the year that we see that impact in full.
Yeah, I think most likely, especially the first half of 2023. I think we're kind of going into it now where we're going to see it a little bit tougher, but I believe it's going to be short-lived. And I think we'll bounce back really well.